Will a share of Tesla stock truly reach $15, triple zero? Today, this amount might seem like a big ask considering the stock price of the EV firm, which is at $864.51. Continue to watch and listen to find out more about is the price of Tesla shares too high or too low? Both supporters and detractors of Tesla still have unanswered questions about this. The top EV company appears to have extraordinarily high valuations, but its price projections are also absurdly low. You will learn whether or not Tesla stock will eventually be valued at $15,000 per share in today's video. A group of engineers formed Tesla with the goal of demonstrating that driving an electric automobile could be faster, more enjoyable, and need no compromises compared to driving a gasoline-powered vehicle. These days, Tesla produces endlessly scalable, sustainable energy generating and storage devices in addition to all electric cars. According to Tesla, it is imperative that the world transitions away from fossil fuels and towards a zero-emission future as soon as possible. The founder and CEO of Ark Invest, Catherine Wood, presented a fervent argument for Tesla shares to hit $15,000 in February 2020. She compared it to Amazon 20 years ago. Tesla is currently nowhere near the staggering number, even after the stock split for 5-for-1, but it has had an incredible run, rising by over 425% year-to-date, and Wood's fund has done well with it. Prior to that year, Josh Brown of Ritholtz Wealth Management, who had met Wood during a conference in New York City, remarked that he thought she was a serious, brave, and curious person. That didn't stop Brown, though, from criticizing Wood for leading Ark Invest in an absurd and trolling route with Ark's tweet, which he said was intended to hit value investors, skeptics of innovation, and other skeptics on the head. Based on 2022 projections, Ark anticipates that in order for Tesla to reach $15 per share, the company's gross margin will need to double from 20.9% in Q4 2019 to 40%. Wright's Law, which anticipates cost reductions as technology advances, serves as the foundation for the prognosis. Though the law might be valid, it doesn't account for a variety of unforeseen circumstances. Tesla will have to cut pricing as a result of more competition. Increasing competition might also compel Tesla to adopt a new strategy and begin investing in marketing. Additionally, it might compel the EV maker to create outlets in less lucrative locations and increase its post-purchase service spending. The margins will be reduced by all of this. Furthermore, Tesla is not a standalone company. It will eventually need to match the gross margins of the entire auto industry. To be fair, Ark has also put forth an even more extreme scenario in which Tesla files for bankruptcy and the share price plummets to zero. Most likely, the answer will fall somewhere in the middle. Naturally, that forecast was made in the first half of 2020, that is, before the global COVID-19 epidemic struck, which altered the situation. It is no secret that the epidemic had a significant impact on the economics of nations worldwide, which in turn had an impact on the stock market. But since then, Ark Invest and Cathie Wood have revised their Tesla value model. Elon Musk, the CEO of Tesla Inc., concurred with Ark's 2021 open-source Tesla model, which stated its projected value of $3,000 per share in 2025. If they do well, he suggested, a price tag of $3,000 per share is feasible. According to Musk, if the business does well, each share will be valued at $3,000, meaning that Tesla will be valued at over $3 trillion, making it the most valuable corporation in the world. She stated that there are a few important factors, one of which is the market share of EVs, which is in the low 20s globally, as she asserted, and she believes Tesla would be able to reach that when asked why she had set a $3,000 price target for Tesla by 2025. She continued by saying that the US currently has about a 60% share. According to Wood, Tesla will dominate the electric vehicle market going forward, particularly if it becomes the first company in the US to successfully launch an autonomous vehicle. She continues, we're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20% to 25% share of the total auto market in 5 years. That's by 2026. The Wood-led Ark Invest team modified their valuation model this year in response to significant revisions, which included estimations of capital efficiency, assumptions and inputs for autonomous ride-hailing, and an advance of the prediction to 26 of 1 year. Based on their examination of customers' perceived time value, Tesla has modified the model to reflect new assumptions for the overall autonomous ride-hailing market at each price point and the likelihood that the company would find a solution for completely autonomous driving. More demand than initially predicted is anticipated for autonomous ride-hailing at higher pricing points. Nevertheless, the revised model indicates that Ark has established a $4,600 price objective for Tesla by 2026 and came to the conclusion that there is a 25% chance that the price of Tesla shares in 2026 would be $2,900 in a negative scenario and $5,800. In what years do you think the stock price of Tesla will be? Post your ideas in the space provided for comments below. According to Cathie Wood's current estimates, Tesla might be valued close to $5 trillion by 2026. Star investor fund Ark Investment Management has placed a significant wager on Tesla, an electric car manufacturer. It's no secret, though, that word of Wood selling some of her Tesla stocks went viral online amid the most recent decline in the company's stock price. News reports state that longtime Tesla bull Cathie Wood began to appear a little less optimistic. That didn't last long, though, as Cathie Wood quickly gained popularity on the internet after heavily jumping back into the Tesla bandwagon. Two of her exchange-traded funds purchased Tesla's shares in spite of the decline. 1,893 shares were purchased by the Ark Autonomous Technology and Robotics ETF, while 1,107 shares were purchased by the Ark Next Generation Internet ETF. In response to severe losses in the severely damaged stock, Ark Investment Management has acquired an estimated $28 million worth of Tesla shares during a violent sell-off in technology peers, with the electric vehicle maker having the second highest weight in the portfolio at the time. Zoom surpassed Tesla to become Ark's largest position. According to reports, Cathie Wood is buying Tesla stock at an exponential rate as the price drops. When the value of Tesla's stock increased, Ark Invest sold 8,100 shares, or over 0.5% of its total holdings, for an estimated $5.76 million. As a result, Wood continues to closely monitor Tesla as one of his innovation-focused ETFs. Wood claims that Tesla is 3 to 4 years ahead of Lucid and Rivian in the battery market. American electric vehicle manufacturer Lucid Group Inc. and automotive technology business Rivian Automotive Inc. These are both based in the United States. According to Wood, Tesla is actually ahead of nearly everyone else. She claimed that this is the result of Tesla's increased creativity in the battery industry, particularly when they experimented and added silicon to anodes using ultracapacitors. Wood thinks Tesla is 3 to 4 years ahead of the competition because of these factors. Morgan Stanley's global head of automobiles and shared mobility research, Adam Jonas, appears to concur with Wood, stating that the corporation emerged victorious in the competition for electric vehicles. According to him, Tesla is leading the electric vehicle race as it currently exists. He wrote, "Consider the EV race as a marathon at mile 21. Tesla is leading the race. At mile 2, everyone else is still tying their shoes." In Wood's opinion, the true breakthrough came when Tesla decided to create its own AI chips, designed by Tesla. The specifications were released in 2018. They have been gathering data for billions and billions of miles ever since, though in a technical sense, their robots have been gathering the data on their behalf. It is noteworthy that the accuracy of these forecasts and presumptions depends on the state of the economy, which in turn influences stock and market values. Those who are acquainted with the sector are aware that daily fluctuations in stock prices are caused by market factors. Market forces such as supply and demand affect share prices. A stock's price rises when there is a greater desire to purchase it than to sell it. However, Tesla's stock price also varies. Furthermore, those in the financial sector are well aware that price fluctuations in the stock market are just as severe as those in regular markets. These days, the price of oil and other basic commodities keeps rising at an exponential rate, while the price of stocks is starting to decline. See more of this information at Tesla stock.